Peter Rose, Longwood, currency trading. Oh, I needed that. Two ways of looking at fundamental analysis. Either you can do active analysis or what I call observational analysis. And I kind of want to talk about those two things today. But first, I came into the kitchen because Sue's baked some bread, so let me get that out of the oven, and then we can get on with our little discussion here. I've done some discussion on fundamental analysis before in videos and blog posts, and I'll put some links into the description of the video. But in a video and a blog post that I did called "The Correct Use of Fundamental Analysis in Forex Trading," I identified two different kinds of fundamental analysis. Either the news, the immediate stuff that's going on, or the long-term economic conditions that are available to have data on. I mean, but news is just data, right? So what do I mean by active analysis versus observational analysis? And I have to preface this by saying I am not a fan of trying to incorporate fundamental analysis in your retail trading. We don't have the resources to get the news when it's going to hit, and we don't have the resources to analyze the news for its long-term consequences. That's a loser's game, and it's a 24-hour immersion in macroeconomics that you have to do. So as a retail trader, you can be told all you want, but you're not going to be successful at fundamental analysis because you just don't have the time for it. You don't have the training in the background. Look, the guys that are out in the big hedge funds and the institutional traders, they're sitting at their desk 9-10 hours a day. They're living and breathing this stuff. They got degrees in economics, and how are you going to compete with that? There's 200 of them in the bank, and they have daily meetings. How are you going to compete with it? Well, you're not. So that's where my discussion of active analysis versus observation analysis comes in. If you're doing active analysis, you're actually looking at the news to give you some clue as to what's going to happen. I'll tell you what's going to happen. You're going to read an article that your country's bank has just decided to raise their interest rates significantly. Now, that should cause the price of your currency to go up. Maybe not immediately, because things have to turn around, but you would anticipate that to be the case. And that's true. The problem is, when is it going to happen? Because it's the retail traders that react to this stuff. Well, look at the non-farm payrolls, for Christ's sake. You don't want to trade that. You've got spreads that run, on the majors, can run 8-10 pips, and the volatility is all over the place. And then when everything settles down, it's like a damped harmonic oscillating wave. You know, that just you're going to come. This is the kind of thing. So you would expect that if you were actively studying the news and you had all these indicators to say such and such X country's price should go up as a result of this news, exactly when is it that you're going to hit bid? When are you going to do that? We're going to do that right now just because you figured it out? You're going to do it right now because CNN come out and has this broad-based analysis of the country that indicates that the currency price should go up? Is that when you're going to do that, when CNN does it? Or are you really smart and you think you're going to get the dope on all this stuff before CNN does? You're actually out there wasting your time trying to figure this shit out. But the news is all around us. You know, you can't say to somebody, ignore the news. Well, you can't do that. You know, here in the United States, this is 10th of February of 2022, and the Fed has been hinting at raising interest rates for 5 months. They haven't done it yet, and they're meeting soon in March, and they're going to come across with what they think might be 0.25% rise 4 times during the course of 2022. So when is it that the dollar should start going up? The dollar hasn't been going up against some of the majors. It's been going down. For example, all the good things in the United States that are happening, and now the crisis with the threat of Russia invading Ukraine and the catastrophic effect that's going to have on the economies of all of the Eurozone countries, lack of oil, and they're saying that the price of heat is going to go up 50% if that happens. These are not good things for euro currencies or the pound. And in the United States, we're off of this Omicron virus surge that we were in. There's still parts of the country that are doing really bad, but we can see the light at the end of the tunnel. We have interest rate rises coming. We've got an enormous increase in the jobs from the last on-farm payroll report. Jobs increase, salaries are going up. There's some problems with housing prices. They're starting to stagger now. But from the whole, the U.S. economy is looking very strong when you compare it to what the UK or the Eurozone economies are looking like. Not in short-term stuff, but in long-term stuff. And so what's the dollar done against the pound? It's gone down. The pound index is up 33 points today, and the dollar is down 17. How do you figure that? So if you're doing active analysis of fundamental conditions, you're on the wrong side of the stream. I'm on the wrong side of the stream because I decided to do long-term stuff, and I understand I can't predict when something's going to happen, but the information was out there, so I formed an opinion. Well, let's go long dollar. I got chewed up. Now, eventually, it's going to happen. I mean, the dollar has strengthened considerably from where it was a month ago. But when you take a bet a month ago and you're sitting there waiting and the thing is still going down, that's craziness. You know, eventually the dollar will increase in strength over a long period of time, and the euro currencies and the pound, those will all weaken. Now, that might not go for more than 8 or 10 months, but it's a wave. The currency market is like an ocean liner. You don't just say hard to starboard and this big boat makes a turn to the right. It'll take 6 miles for that thing, or an oil tanker. It takes 6 miles for that thing to turn. If you're in a little runabout boat and you throw the tiller over, man, the boat's going to spin right away. You're talking about massive economies. So for you to think that you're going to do active fundamental analysis and act on that information, you're crazy. Because what's going to happen is the more you study this stuff, the more the opinion that you're going to have. I did a video on that. I did a blog post on that. I've written a seminar on that. And one of the titles is "Save Your Opinions for Movie Reviews." Opinions don't have any place in retail forex trading, because that's all it is. Your view of the news and fundamental conditions is exactly that. It's your opinion. And for every one of you that has an opinion that something should go up, there's another person on the other side saying it's going to go down. And most of that is going on by retail traders who don't know what they're doing, and it's the institutional traders that can take advantage of that. Look at the pin. Where do you think the pin bars are coming from? They're not coming from the retail traders. They're coming from the institutional traders. They're taking advantage of stock of the retail traders by stockpiling their currencies. The other institutional traders aren't getting caught in that shit. One guy goes in with $300 or $400 million, run the price up. Oh, okay, we're done. Sell it all. Boom. All the retail traders' stops get hit. The banks that are on the other side of that, they're happy to accumulate the currency through buying where the other guys sold it. They're happy to get their price, and the other guy's happy to get his price. Because in the long run, they know what's going to happen. And they've got the capital and the time in order to play that game. They can sit there and wait because they're dealing with 40 different currencies, satisfying the financial, economic needs of clients in 2 different countries to conduct commerce. And so that commerce is taking place over a broad spectrum of time that's fundamentally based. But the retail traders, what are you doing? You getting all your information off CNN, are you? Good luck. Good luck. That ain't going to happen. Well, in my case, I'm interested in economics. I mean, I've got a degree in physics and was a software engineer in real estate investment. I mean, from a standpoint of economics, you have to be aware of that in an active sense in real estate. And again, it's the real estate that I was so successful at that the timing is so totally different. And it screws up my trading. It really does. And I mean, I know what to do, but I can't help myself because I've got 40 years of ingrained survival habits that have given me a lot of trouble in trading. And the problem is I didn't have anybody to teach me what the timing differences were or to even mention them to me, so that as I was going through my early stages of learning to trade or building simulation models of trading and stuff within a computer program, they were all based on false assumptions of time. And so you build up a different kind of survival condition, thoughts, even though they're wrong. And it's very difficult to break. That's my struggle with that. I've been very upfront with everybody. That doesn't necessarily mean that I don't know what I'm doing, and eventually I'll be able to overcome these blocks. But for those of you that are out there that are not encumbered by this stuff, you got the whale by the tail. But not if you're going to look at fundamental analysis from an active standpoint. You have to do it from an observational standpoint. Active analysis is done by looking at price action. Observational analysis of the fundamentals is what you do just in the course of your interest in the Forex market. If you don't have any interest in the fundamental conditions of the 2 pair countries that you're trading, you have no business trading because you're going to get caught. You're not going to understand what causes a pin bar. You don't understand the most important mathematical expression and equation that's out there and its secondary component, the win-to-loss ratio. You don't understand those things because those are all fundamentally economic-based equations, where the results of them are based on the fundamental conditions of the 2 pair countries that result in the price action. The fundamentals, yes, that's the dog. The price action is the tail. But we don't have any way to control the dog. We're not the dog in this. So you can look at the fundamental analysis in 2 ways. You can look at active analysis or you can look at observational analysis. Don't do the active. The observational part is an interest that you have in the fundamental characteristics of the 2 pair countries, as I said. But don't fall in love with it and form an opinion. As soon as you form an opinion based on what you're doing, you got to have a rule to stop that. I've got a rule. It's just, you can have a rule that says when you see the stop sign, hit the brakes. But, if you got your sunglasses on or the sun shines in your eyes at a particular time and you don't see the sunshine, you can have the rule, but your instincts are not going to hit the brake when you see that stop sign. You're not going to recognize it, right? So the observational part is to understand, oh geez, the federal bank, whatever it is, they're talking about raising interest rates. That means that 2 weeks, 2 months, or 8 months from now, my country's currency should be a little bit stronger, or this pair of country currency should improve. Well, what other conditions are out there that would make it improve? Well, we're losing jobs like crazy and blah, 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 but we can increase the interest rates, but I don't know that that's going to help. So maybe that, from a long-term view, that's not really what we're looking at. What does the monthly chart look like? What does the weekly chart look like? That's where the institutional traders are taking this thing. If you look at the weekly chart, it's that big ocean liner. That's the weekly chart. And you can see where their thought process is as to where they feel the price is going to go in the long term. They're building positions. In the large institutional banks, they have a whole section of traders. All they do is buy currencies in the different pairs. That's all they do, and they warehouse it. So when it comes time to sell, they got a shit house full of it to sell. It's a whole different way of thinking and looking and responding to those types of fundamentals. As a retail trader, be realistic as to what you're going to be capable of doing, no matter how good you are or how smart you are. So don't worry about it. Watch CNN, see what's going to happen. Look out at that news. May have effect 3 months out. Look at the 1 week chart. Is that consistent with continuing current price action, or is that weekly chart going to have to change? If that price begins to roll over and you start breaking on a weekly chart, you break an 8-period moving average, 8-week moving average, and you start breaking that, even though it's a short moving average, that's that big boat. You're looking at that big oil tanker, and you see it just start to do this. Well, do you think it's going to do that right away? No, there's some intent there. Some of the big boys are beginning to see what's happening, and they're starting to turn that boat. And that's your observational analysis. But you can't act on observational analysis, because observational analysis, if you try to act on it, you're acting on opinion. You're changing observational analysis to active analysis, and you can't do that. Active may be what you do in 3 months, when price action fully reflects this over a long-term type basis. So as that weekly average begins to roll over, you say, well, I can trade the short side now. Or if the weekly starts to come up, say, oh man, things are changing. That oil tanker, he's starting to turn to the left now. Okay, so if I'm over on the left side, I better get out of the way. Fundamental analysis. You can do it actively or you can do it observationally. The choice is yours, and I've experienced both, and I'm just here to tell you that neither one are applicable for us as retail traders. Don't get caught. Enjoy a cup of coffee. Have some nice bread if you can find some. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.